Why all of a sudden are these inflation reports hurting us? Well, I'll tell you why. Sometimes in these major economic reports that we receive, there's inaccuracies. Here's a big one. It's called owner's equivalent rent. They survey homeowners and ask them what they think they could rent their home for. I don't even know what I could rent my own house for, and I'm married to an amazing realtor. There are hardly any rentals around us. I could make up a big number, couldn't I? Especially based on what we've seen in the last couple of years with rents going up. As you can imagine, this could be wildly inaccurate. If you look back over the last decade and you look at this chart that shows owners equivalent rent versus actual, owners usually below. Well, these past 2 months, it has skated above it pretty significantly. Why is that a big deal? This part of the CPI report and the PCE report, two very big inflation reports, it's heavily weighted in the calculation. 33% on CPI, 12% on PCE. So it greatly impacts it, so much so that it could cause it to be higher by 0.1%. You're like, well, that's not very much. But think about these reports that we're getting. Just this past week, it was 0.1% higher than expected. The media and the markets say that's hotter than expected inflation. And that is what's hurting mortgage rates. I think this will balance itself out, and I still think we're going to see lower rates, but we'll probably have to continue to wait for a little longer.